to cut the meeting. Oh, Jesus. All right. Can you see the PowerPoint? Okay. We're off to a good start. Payroll record keeping. Payroll costs are major expenditures, right? Payroll records provide data for controlling these records, especially in service type businesses. When I worked at the Santa Barbara neighborhood clinics for about 5 years, about 20 years ago, having come out of the world of big factory type accounting, Lori, where in factory accounting, from my experience anyway, salaries were maybe 12, 13% of your total expenses. At the clinic, they were like 85. And that I've learned that's pretty true for businesses like that. So if you keep control of your payroll, you got control of much of the work that needs to be done. And there are laws, they can vary by the state, where you have to keep payroll records if you're a business or a person. Employees and independent contractors. Have you gotten involved in this at all, Lori? Are you familiar with what we're talking about here?
Oh yeah, sure. Yeah.
Without getting it,
but,
go ahead. I'm sorry. Talk away.
Oh no, I said I don't have any experience because I have had employees or independent contractors, but I'm very familiar with how they work. Yeah.
Yeah. I'm going to delve into politics for just a minute. We just had an election in November where this state decided that Uber drivers are independent contractors. And regardless, I'll give you my opinion, not that it means anything, but I thought that was a terrible decision. Those drivers don't realize what they threw away. I think, if they're employees, they're entitled to workers' comp and insurance. And they were sold, I think they were sold a bill of goods anyway, but we'll see what happens. Work under the control and direction of an employer, huh? Employees, you work directly for your employer. He tells you what to do every moment of your career. You use the tools provided by the employer. You come to work when he tells you to come to work, and you go home only when it's okay to go home at the end of your working day. You have no independence. An independent contractor is someone performs services for a fee, for a fee, and do not work under the control of the company paying for the services. In other words, you hire a lawyer or an accountant or a plumber, perhaps, or an electrician. They don't come in and start working per your company schedule. They come in, look at the job, and work the necessary hours to get done on their own. They use their equipment, their truck, their intellectual property. Independent contractors. Now, if companies had their way, Lori, I think they would love to call everybody independent contractors.
Sure.
Then we wouldn't have need to study Chapter 8 or 9. Nobody would be an employee. Companies would never have to pay unemployment insurance. They'd never have to pay workers' comp. There would be all kinds of contracts between the independent contractor that say the company can't be sued. So anyway, employees versus independent contractors. And the government laws and regulations for employees are much more complex. If you have an employee, you must deduct taxes. You have no choice. You must keep payroll records and file various reports. Independent contractors is easy. You send them a form 1099. It's a tiny piece of paper and said $10,000. That's how much this guy earned this year. Calculate employee earnings and deductions. This is pretty easy stuff with a little twist that we'll throw in here. 3 steps to determine how much to pay an employee for a pay period. Calculate his earnings, come up with the deductions, and subtract deductions to net pay. Now, this is not something unfamiliar to all of you, but what I'd like to show you here, Lori, is this is your journal entry to record a payroll. Total earnings, right? That's gross pay. We all know what gross pay is, right? Change gross pay to salaries expense. The deductions. You have deductions for Social Security and Medicare and state taxes and the credit union and all kinds of things. Those are liabilities. Those are payables. Subtract deductions from total earnings and you get net pay, which is better known as cash. So your basic journal entry to record a payroll is always going to be just one debit. And that debit is to salaries and wages expense or wages expense. And of course, that's going to equal the total earnings. Everything that comes out of the employee paycheck, I like to call it a withholding for federal tax, for state tax. Those are all liabilities. It's the employee's money, but now it's under the control of the company who has a legal and fiduciary duty to turn that money over to the proper authorities. The difference is your cash net pay. Salaries and wages, pretty much the same thing. Typically, salaries are for higher level people who don't get overtime, often expressed in biweekly, monthly, or annual. Wages are your hourly type people for the most part, but the terms are rather interchangeable. Overtime. Let's understand the Fair Labor Standards Act. It's time and a half everywhere in the United States of America. Okay. All employees who work more than 40 hours in a week are entitled to overtime at time and a half. You multiply your hourly rate times 1.5. If you make $10 an hour, you multiply by 1.5, you get 15. That is your total overtime rate. Some salaried employees are exempt from this act and are not paid overtime. And that depends on how much money you make, what your responsibilities are, what kind of independence you might have as an employee. So some salaried employees are exempt from the rules and not paid overtime. And many of you in the class, I bet, worked in the fast food field like I did, a long time ago. You worked for McDonald's. McDonald's got into a lot of trouble maybe 20 years ago, not just McDonald's, when they would tell perhaps a worker there who goes to college, and he or she was working there maybe 20 hours a week, and they started off at minimum wage and they got a raise up to say $10 an hour, and now they're making 12. And then when they got a raise to $12.50, they became managers. They couldn't receive overtime anymore. And that was a real ripoff. And thankfully, the government authorities stepped right in and slapped McDonald's on the wrist for that. Compute total earnings. When compensation is based on time, a record must be kept of the time, huh? Time cards, plastic cards, badges. I'm sure employees still in many places swipe in, probably like I do when I come to school. I have to swipe in to enter the building. So you swipe in or you punch a time card, and that's where the data is going to be gathered. Huh? We're going to take the hours worked times your rate. Total earnings. Now, this is pretty simple, but we're going to go into a little bit of twist, Lori and everybody, is we're often going to have to turn salaries into an hourly basis for different reasons. So we'll start with this easier example here. Helen Kuzmik, nice Polish lady, I guess, worked 54 hours this week. She earns $14 an hour. She worked 4 hours on Sunday, and she gets time and a half, 1.5 times the regular rate for hours in excess of 8, Monday to Friday, and any hours worked on Saturday. And look at this. Now she gets double time if she works on Sunday. Good gosh. So we have to sort this out. Well, let's see. She works $14 an hour times 54. That's going to be her, let's call that regular pay, huh? And then she worked how many hours on Saturday? She worked 4 hours on Sunday. Looks like she didn't work on Saturday. So she gets double time because she worked on Sunday. You multiply it out, that's $28 she gets there. So very simple. Let's look at what we have here now. Lori, I said Lori, it was Helen, right? Helen, Helen worked 40 hours at $14 an hour, $560. She worked 10 hours at time and a half. She worked 10 hours on Saturday. They don't tell us she worked 10 hours on Saturday, do they?
No, 4 hours on Sunday.
Yeah, but in the problem, see, they're throwing in 10 hours here on Saturday, but that's okay. Another mismatch in the slides. So she apparently worked 10 hours on Saturday, and they're keeping that a secret in the prior slide. And then she gets her double time for Sunday. So suddenly Helen has gross earnings for the week, gross pay, $882. Here is a salaried employee. Linda Swanee has salary of $2,600 a month. Plus, she also gets overtime. So here's an example of a salaried employee who does receive overtime. Another way to say it is she gets that $2,600 a month automatically, and then any overtime on top of that. In order to compute her overtime, we must determine her regular hourly rate. So a person could be paid annually. They could be paid quarterly. They could be paid monthly. I was paid monthly most of my working world. Paid every 2 weeks, twice a month, etc. Weekly. So we have to turn her. We got to figure out her regular hourly rate. Well, here's the way we go. $2,600 a month times 12 becomes the annual. When you're doing these conversions, first get the annual pay and then divide by 52 weeks in this case, because they're looking for the weekly. So her weekly salary, if you will, is $600 per week. So here she goes. She works 600. She gets 600 a week, and it turns out her $36,000 a year, $2,600 a month, if you divide it out, do the math, is $15 an hour. So she makes $15 an hour. She got some overtime, $22.50 overtime pay, $22.50. And they're showing you the Ms. Swainey's work here. 40 hours times 15, 10 at time and a half. And how did we get to 22.50? We took the 15 times 1.5. That's what time and a half is. 1.5 times more than you normally make. Excuse me, Lori. Get them up. You got your gross pay. Gross pay. The grossest pay. Now we're going to deduct things. And what's going to be deducted will be federal taxes, state, depending which state you inhabit, maybe a city tax. So you have all those income taxes maybe coming out. And then you're going to have the FICA, Federal Insurance Corporation. I don't know if it's an agency, I think. FICA. That encompasses two types of deductions, your Social Security and Medicare. Social Security, that's what I live on now. I'm collecting Social Security. And you people who are in the working world today are now paying for my retirement. Thank you very much, by the way. So that's the Social Security piece. The other piece is Medicare. That's my health insurance provider now. So you students are now paying for my medical care as well. And again, I thank you. Just like future generations will be paying for yours. And don't pay any attention to the silly talk you might hear about these programs going broke. It's not going to happen. Anybody who thinks about it or reads knows that. Anyway, I digress. Then you have voluntary deductions. These are the ones where you tell the boss, I want you to take this money out. I want to join the union. That's going to cost you $20 a week. I want health insurance. That's another $30 a week. I want to put money into an IRA, etc. Gross pay less deductions equals net pay. Gross pay, everybody, what is that called? That's right, salaries and expenses. Deductions are called liabilities. Gross pay is called salaries. Oh, I'm so sorry. Salaries and wages expense minus these withholding liabilities equal net pay, better known as cash. Now, this chapter, Lori, I wanted to point out, and I did not. Chapter 8, we're only talking about doing the payroll as far as the employee goes, okay? Chapter 9 is when we're going to talk about the employer's impact, okay? And I just wanted to make that point clear, and I'll do so again as we go along. What's federal income tax? It's required by the United States, required by federal law, and it's going to be applied to by the payment of the employees' federal income tax. And it's determined by how much you earn, the marital status you claim. We'll say, what is your marital status? Let's say, do it honestly. The number of withholding allowances claimed, and the length of the pay period. In other words, when you go to compute your income tax withholding for a particular employee, that number is going to come from the various schedules, the IRS schedules. And I think we're going to see an example of that. Withholding allowances, okay? Total earnings, marital status. Okay. Withholding allowances. Those of you out in the workforce, I'm sure you remember, I bet you do, you filled out a W-4 before you could go to work. Form W-4. And what this does, it exempts a specific dollar amount of an employee's pay from tax withholding. So you sit down with the W-4 and you can fill it out based on your marital status. You might say single, and perhaps you said single zero. In general, each employee is permitted one personal with allowance and one for a spouse who also does not claim an allowance, and one for each dependent. Not necessarily enforced, though. You can put pretty much whatever you want on the W-4. Has that been your experience, Lori? Or, pardon me?
Yeah, yes.
Yeah, you can put whatever you want on the W-4. If you're a married person, if you're a single person, and you claim on your W-4 that you're married, and you're talking about you have 9 allowances, well, the company is not going to take much money out of your paycheck, and you're going to look good for a while until you file that first tax return. And all of a sudden, you owe a ton of money to the feds. Well, they're not going to be happy getting a big check from you at the end of the year. Quite the opposite. They're going to be angry because they gave you an interest-free loan for the whole year. And they're going to come back at you with a letter and a form that says, guess what, Mr. 9 allowances, from now on, you are single zero until further notice. Single zero, that's the one where they take the most out of your paycheck. Now, there are people, and I'm one of them, and I know what I did was wrong all these years, but it was more psychological. I was always single, and I should have claimed 0, and at the end of the year, it might have worked out, but I had them take extra tax out, really. And at the end of the year, I enjoyed a big refund, Lori. I would set myself up to get maybe $2,000 back from the feds. Was that a good idea on my part? Why or why not, do you think?
Because you basically gave the IRS an interest-free loan.
Absolutely right. You were right on top of that. Yeah, just like the IRS was angry when I sent them a giant check at the end of the year, The IRS is laughing at me when they send me my check, because all they're doing is sending me back my own money at no interest. But there's something nice about getting a refund, especially a couple months after Christmas. That's just me, but it's also a lot of people. So the withholding allowances. Now I'm going to tell you another war story from my world. If you claim more than 9, Lori, are you familiar with the rules on that?
Mm-mm.
I don't know. Now, the rules may have changed because this was many years ago. But it used to be if an employee filled out a withholding allowance of more than 9, we'll say double figures, 10 or more, you were obliged to send a copy of that W-4 to the IRS immediately. And what the IRS would do is, after checking it out a little bit, would send this employee and the employer a letter saying, we're not accepting this. You have to go back to, say, single zero. And when I was transferred from New Jersey to our factory, our office in Los Angeles and the factory in Ontario, I happened to notice that the employee personnel folders were this thick. They were huge. And the reason was, Lori, when these guys would go on vacation, they would change their W-4 to like 15. You see what they were doing? They wanted to get a big paycheck for their vacation. And I told these guys, you really can't do this. And I'm not going to accept these anymore. And they went pretty nuts. And I did turn these into the federal IRS, had no choice. And these guys, they were furious for a while. But the law's the law. Here's your W-4. Ken Isotone, he's the guy who invented the gloves, I bet, huh? And here is his information. And here's what we're talking about. Single, married. He claims he's married. If he's really single, did he do something wrong by clicking on married? No, this is not a sworn affidavit. And he's claiming 4 allowances. 4 allowances. He may be a single man with no kids, but this is okay to do this. It's just at the end of the year, he's going to owe the government a lot of money. The government's going to be unhappy with him and may take some action. The W-4, you fill it out just once, unless it changes, of course. You get married, you might want to change it. Wage bracket method. Oh, there we go. That's what I wanted to see. Wage bracket. Ken Eystone is married and claims 4 allowances. Here in $640 a week. So in order to get his federal tax number, his federal income tax, we have to use the proper schedule. And the IRS has a booklet with all the different schedules. It's the 1040 booklet. You can get it for free anytime. Wage bracket method. So you find the row where you got his 640, and it's going to be in the section from at least 635, less than 645. Look for 4 allowances. Find the amount where they cross. This is the amount. I think a picture is going to be a lot clearer than that, huh? Okay, so he claimed that he was a married person. So we know we're going to go to one of the married schedules. And we know he's paid weekly. His paycheck on this particular week was $640, right? 640. So you find 640 on this list. Let's see, 425, you'd be 635, at least 635, but less than 645. We come over 1, 2, 3, 4. He claimed 4. His taxes on that money is going to be a whopping $10. That's his tax on that $640. Okay. So you're going to get familiar with different schedules. You're going to have married weekly, married monthly, married semi-monthly, married bi-weekly, annual, whatever. And the same for single. And then you'll have them for a head of household. Now let's talk about FICA. just like income tax that we just did, just like federal income tax, this is a mandatory deduction. Employees have no say in how much comes out. And what we're talking about here is the amount that's coming out for Social Security, for my pension, and for my Medicare. And it looks like I botched up this acronym, Federal Insurance Contributions Act. I think I said Federal Insurance Corporation, FICA, Federal Insurance Contributions Act. Federal Insurance Contributions Act. I want to remember that. Social Security. Social Security is my pension. I receive a check from the United States government every month for the rest of my life. And that check is based on how much I earned throughout my career. They look at the top, I think it's the top 10 years of earnings, and they compute the number. So I get that payment every month. Medicare is my health insurance. I broke 3 ribs a couple of years ago, and I went to the urgent care guy, and they gave me some pills and fixed me up. All I did was hand him my Medicare card, and that was taken care of by the United States government. Okay, so this is the money coming out of your pocket to pay for the old goats like me. FICA withholding. On your test, I don't think you need to memorize the rates, but it will not be long when you're out in the working world where you're going to know this like the back of your hand. Social Security is 6.2% or 0.062, turning it into a decimal. Medicare is a smaller number, 1.45%. Move the decimal over 2 points and you got 0.0145 to punch into your calculator. You add them together, it comes to 7.65. And that's just a figure that's going to be in your head, I think, for a long time. Social Security, 6.2, Medicare, 1.45, the two elements of the FICA. There's a limit on Social Security. And in your book, they're using $128,400. What that means is once an employee earns $128,400, they will no longer have this tax taken out of their paycheck. Okay? So the most anybody can pay is 6.2% of 128.4. That's the most anybody can pay, whether you're Bill Gates or just a manager in a store. It cuts off at 128.4. This is going to be important in the next chapter when we do the employer side. Medicare is a smaller percentage, but there's no maximum. No maximum. This is what's called a flat tax. A flat tax. Everybody pays the same. If you make $1,000, you're going to pay $1.45 in taxes. If you make $1 million, it comes out to whatever, 14,500 or whatever. This is what is known as a flat tax. The Social Security is known as what's called a regressive tax, because the more you make, the less you pay as a percentage. And I just like to demonstrate that. You made exactly $128,400. So you paid the max, whatever that is. Do you have a calculator in front of you, Lori, by any chance?
Don't.
Okay, hold on. I don't like to grab my cell phone during it, but that's okay, no problem. Well, I want to come up with that number. Where is my calculator? There we go. 128,400 times 0.062, about $7,000, almost $8,000. It comes out to $7,961. We'll call it 8,000. Okay, that's the most anybody can pay. But suppose you make $10 million, Let's say you're a big 1%er. If you make $10 million, the percentage that you pay is microscopic. It's 0.000, it's 1/10,000th of a percent. This is an example of what's called a regressive tax. The more you make, the less you pay. Okay. And as far as fixing Social Security, not that it needs fixing, and I don't think it will for quite a while, because we should be having a pretty good economy, at least in the near future. The fix on this would be maybe raise the 128,400 a little more aggressively, or change the percentages. There's a lot of play in these numbers here, okay? And these rates and maximum amounts subject to FICA taxes, they can be changed annually by Congress. I've never in my lifetime seen anything except 6.2, 1.45. But this is the number that they play with every year. This goes up every year. Here we go. Sarah Candrain earned $2,000 a month for the week ending the 12th. That brought her and her earnings up to 127,340. Okay. So what's that telling us? She still has not reached 128,400. Therefore, every penny of that 2,000 is subject to the Social Security tax of 6.2%. Not too tough. Medicare, 0.0145. So her total on these two taxes is 153. Now, if her earnings before this week was, say, 129, bringing her, I'm not going to get into that. That's more for chapter 9. I thought about showing you how you do it when they overlap. Let's hold that off for next week. Okay. Federal taxes, state taxes, city taxes, county taxes, municipal taxes, Social Security, Medicare. Those are mandatory taxes. They have to come out of your paycheck. You can't do anything about them. But as an employee, as a person who wants to advance and, increase your wealth, you want to provide for your family and for yourself, you might have your employees deduct things that are optional and depend on a special agreement between the employee and the employer. You might buy savings bonds. Boy, that's an old-fashioned thing to put up, huh, Lori? Savings bonds? I haven't heard that in a long time. But you want health insurance. You want health insurance. The health insurance costs your company $500 per person. So the company says, I'll pay the 500, but you got to pay 50. Credit union deposits. I was in the credit union forever. And then the 401k plan. Every one of you've heard this before. You're not hearing this for the first time. If you have an opportunity to be in a 401k plan, you want to be in it to the greatest extent possible. If your plan is you can put up to, say, 4% of your salary in, you would be crazy not to do everything you can to put that 4% in, because that means this week, that's money that you're not going to pay tax on, and you're going to earn interest and dividends on it until you retire. And then when you spend that money, when you go to take that money out, it'll be at a much lower tax rate probably, and you'll have savings there. Okay. Two kinds of 401k, the IRA and the what are we talking about? Yeah, the regular IRA and the Roth. One is different than the other. The Roth, if you put in a Roth IRA, you'll never pay a penny of taxes. Zero. Never pay taxes. Roth, I think, is the way to go long term. The only thing with a Roth, you don't get a tax deduction this year. Charitable contribution. So we understand that, voluntary. So let's see what we have here. Here's a pay stub for that lady who earned $640. or that gentleman. This is Mr. Icestone. His $10, he was the guy with the 4 allowances, married, federal income tax 10, Social Security tax withheld, Medicare withheld, and here's a voluntary withholding for health insurance. His total deductions were $68.96, his net pay $571.04. And I urge you to look at this page. This is your journal entry. Gross pay, change that somewhere to salaries and wages expense. That 640 is the company's expense. That's the company expense, 640. What you do down here in terms of your withholdings has no impact on the company at all. The company salaries and wages expense is your debit to your gross pay, if you will. Everything else is a credit. These are called withholding. I would call it withholding dash or withholding for federal income tax, withholding for state maybe, withholding for Social Security, withholding for Medicare, withholding. These are liabilities. So again, you debit gross pay, salaries expense, credit all these liabilities, and net pay is cash, okay? Payroll records, we'll look at this a little bit. Oh my goodness, this is a busy slide. Payroll records. Well, there's certain bits of information the employer has to keep. They got to keep track of the person's name, address, occupation, social security number, very important, marital status, and the withholding. The marital status, they're getting that from you. That's the one that you can control, the marital status and the number of the allowances. You're going to give them your social security card, so they take a picture of that, and you're going to tell them your name, address, and occupation. So they have to keep track of that basic stuff. They have to keep track of the gross pay, when you paid it, and what period it covers. And they're going to worry about the gross amount. Remember, the only thing that affects the employer is your gross pay, which is the salaries expense. But they need to keep track on your behalf for the withholdings that come out. So we're talking 3 payroll records here, huh? We have a payroll register and the payroll check, which we all like, and an employee earnings record. Payroll register, we'll take a look at that, okay? Direct deposit, payroll register. You're going to have this for each period. It's let's call it an Excel file, okay? Most companies, by the way, don't prepare their own payroll. Most big companies, I would think. They use ADP, right, Lori? Do you do your own payroll work, or you use ADP or somebody?
I barely get paid, so no.
What's that?
I don't even get paid. So,
Boy, that's it. You can come work for me anytime, Lori.
right.
There we go. You're a drawer. Okay, payroll register. Payroll register is a form. It's going to have the name and social security, blah, blah, blah. Maybe not social security number. And then it's going to have the hours, the rate, how much. And I'll show you a nice example in a moment. Since marital status and number of allowances are used to compute, you're going to see them on the payroll register. And then you're going to see the earnings. You're going to see the regular earnings, the overtime earnings, the double time earnings, and you're going to see all the withdrawals. So you can read that pretty easily, right, Lori? Okay, here's page 1, if you will, of our payroll register. We have our employee name, the allowances they claim through their W-4, their marital status is binary, it's married, it's single. Well, I guess it could be head of household too, I'm wrong there. And here are their earnings. This person earned $2,000 regular pay and $60 overtime pay for a total of $2,060. After After that week ended, their year-to-date pay was up to 129,400. So they didn't have to pay the full 6.2% on this. They only paid the difference up to 128,400. But let's not worry about that now. And then we had, of this 129 cumulative total, this is the total payroll. Unemployment compensation, looks like they had one down on the bottom. But what we're talking about here, guys, this is called the taxable earnings. Taxable earnings. And what you're going to learn in chapter 9 is that the company and only the company pays the unemployment insurance. And let me change, what did I do here? Holy cow. What a mess. Okay, let's fix this here. Only the company pays the Social Security there. Where did I see that? Oh, okay. I'm so sorry, guys. I wish they put both pages on the front here. I am going to bump this up a little bit, please. Okay, it's giving me a hard time. Do it. Oh, there we go. Okay. Earnings. This is the amount here, the cumulative for the month. Total 2060, year to date 129. Now, the two columns to the right, everybody, that is the amount of the cumulative that's subject to the tax. Subject to the tax. So look at this. I only see one employee who got over 128,400, and the other people are not up to that yet. So their entire 640, you see the 900, 640, everybody who has not gotten up to 128,400, their entire check is subject to the tax. Here, this person made 2,060, but only the amount that got them up to 129,400 is taxable. And then on the bottom here, you're looking at Harry Willis, and they've got $360 coming out for unemployment compensation. Okay. Let me escape. So that's page 1. And I have an Excel file I'd like to show you briefly on top of this. So here we go. On the prior page, if you remember, we ended up with the taxable incomes. Here are the federal. Oh, this thing is awful. They don't show the names. Okay. This thing is not good. Okay. Federal income tax, Social Security tax, Medicare. You're taking all these out. United Way, they made a donation. Here is your total deductions, and there's your net pay. Here is your credit to cash. Here is your credit to all these liabilities. And if I may, I'd like to just bring up something briefly here. Okay. No good. That's not quite what I wanted. Okay, here's a poor man's look at a simpler payroll register. You have the names: Bob Cousy, Bill Sharman, Bill Russell, etc. Total hours worked times 15. Regular wage is 600. This person worked 40. Looks like we have a little bit of overtime because this person worked 45 hours. So 5 times 1.5 times 16 is 24. 5 times 24 is your overtime. Okay. So that's kind of a short version of what we were just looking at from your textbook. Now here's the second page. The second page. We now know the gross pay. Now we're going to pull out the federal income tax. And I just threw these numbers in. This is not a real calculation. And we come up with the net pay. So why am I showing you this complicated schedule? Because when you get done with it, look at your journal entry. Look at that journal entry. What was our total gross amount? It was the 3,155 here. 3,155. And here it is here. You just bring the number down. You bring these over as your liabilities, and there's your cash. So that's the journal. Journal entry is not too tough, Lori.
No.
You'll be surprised. It will cause confusion a lot of people, where they get a little mixed up between what is affecting the employer rather, and the employee. But I wanted to show you that. I thought it made a better visual. Let me share. We're back into our PowerPoint. Okay, we're back in the PowerPoint. I want to get rid of this. Oh, for heaven's sake. Oh man, I'm really having a tough time here. My student, the fellow students, Lori, if they're looking at this, they're going, Bob, all you have to do is push this button. What's wrong with you? Okay, well, Bob has another solution here. Okay, hold on, Larry. All right, well, let's keep going, for heaven's sake. How do you get rid of that? It's got to be so easy. Slides. All right, here we go. At least we can see it now. I have no idea what this page is. Okay, now we're getting into some simple stuff as we finish up here. Man, this is an old-fashioned looking piece of paper, huh? This is called the payroll record. The payroll record. And you're going to have one for each employee. Mr. Icestone, he began with the company, it looks like on 12/19. No, he didn't begin with the company, my bad. On the week of 12/19, he earned $640, bringing his year to date to 303.75. You really should have seen here, Lori, every week, but they're truncating this. They're just showing you this week and what it did to his year to date. Okay. So year to date, this fella has earned $32,025, and he's had 34.54 come out in deductions, and he has been given cash or earned his cash 28,570.09. Employee earnings record. This is the same thing as the payroll register, except it's just for one employee. And instead of seeing all the employees listed, you're going to see one name and then all the weeks listed. So let's take a peek at this. Here is the employee record. And again, it's not as clear as I wish it would be. But this is for one particular person. This is Mr. Ken Icestone. Ken Icestone. And now I know when he started with the company. He started on 11/28. And that week he earned $640. So it looks like he earns a salary of $640. He occasionally gets a little bit of overtime. And the cumulative for the year And then he goes into the various deductions. This is a crucial record that you have to keep. If you lay this guy off, you're going to get a contact from the unemployment office, and you need to verify what he did in various weeks in order for the unemployment people to come up with your payment. And this is just the rest of it here. So here's the guy's name finally on the lower right, Ken Icestone. And you have to count for the earnings and deductions. Journal entry, we talked about this a lot, huh? The journal entry. Payroll register, gross pay is your wage expense. Each deduction is a liability. Net pay is credited to cash. So I would keep an eye on slide 38. There is your journal entry to do a payroll. And there it is. There it is. Debit 689700. I just want to see one thing, if I may. Okay. I would have liked to see this come off a payroll register. Okay. You had a whole bunch of people working for you. You had 12 people who worked for you. Their total expense to you is $6,897, right? The mandatory deductions are the income tax, the state, Medicare. They come out. This guy said, I want health insurance. Company said that'll cost you $46. He's a nice guy. He gives to charity $40 every week. There's your journal entry. Your journal entry. And we're back to these famous grids they like to show. Do it this way. So what they're showing you are the new accounts we're kind of seeing for the first time. Wages and salaries expense. Well, we've seen that one. But take a look. Now we have employee federal income tax payable, Social Security tax payable, Medicare tax payable, health insurance payable, United Way contributions payable. Keep in mind that these are not expenses to the company. This number is the expense, the 6897. This is money that we pulled from the employees' pockets, took it out of their paycheck. We have to turn that money over to the state, okay? And they're just going over I'm sorry. Looks like they're just going over explaining the different accounts. Wages and salaries expense, that's your debit for gross pay, right? Federal taxes, these are the mandatory ones. Social Security, same thing. You will debit all of these when you make the payment, obviously. So you're going to have a credit of, I'd like to go back to here just briefly. Here are all your credits. These are all payables. When it comes time to pay it, well, you're going to send one check to the federal government via Form 940 to cover the taxes payable as well as the Social Security and Medicare. A separate check is going to go to Blue Cross, whoever, or Kaiser, whoever your medical HMO is. And we're going to send a check to the United Way. United Way. Other deductions, nothing there really. Describe various record-keeping methods. Uh-oh, what the heck is this? We'll just talk briefly here. You have a manual system, huh? I don't think too many people have that, even for a small company, right, Lori? Lori's shaking her head. Are you nuts? No, we're not going to have that. Payroll processing center. This is what a lot of companies do. I said most earlier. I probably shouldn't have said that because I don't really know. Payroll processing center, a business that sells payroll record keeping services. Their fees can be much less than the cost of an employee. So companies used to have a payroll, well, they still do have a payroll department. They're still going to have a payroll manager and some payroll people. but the real grunt work is going to be done by ADP. That's the big name in the business. Automated data processing. You may have heard of them. And what it means is they make their software available to you, and they load it up on your server. You go into your server and you go into their software and you enter the hours, you enter the changes to the database, and then you check it over. And when you're happy with it, you post it and send it to ADP, and you can take a breather for a day or two until the checks arrive in the mail. The checks will arrive in the mail a day or two later, perhaps FedExed, and it will have all the reports there printed out if you choose to tell them to do that for you. Okay. And electronic systems, a computer system that performs all payroll record and pays payroll checks. The difference between a processing center and electronic system is the electronic system is internal. There's no third party involved. You decide that you are going to set up your own computer system, or you're going to buy that computer system from some other guy, install it, and you'll take the responsibility for doing everything that ADP does for the other customers. Electronic payroll system. I don't think we need to go through that. And do you know what, Lori? That's the end of our session.
Alrighty.
So that's a little on the dull side, huh? But it's something we got to be familiar with, though.
Yeah, exactly.
We need to know it for two reasons. It's going to help us in the business world, and more importantly, it's going to be on the test. Okay.
Yeah.
All right. Any questions, Lori?
No, I'm good.
What do you got going today? Pecan tarts?
Oh, that sounds good. Maybe.
Well, you just have to let me know. I fantasize. Any
Okay.
comments, questions, Lori?
Nope.
Okay, you take care now. Thanks for hanging in there with me.
Okay. See you next week.
Bye-bye.